Today we're going to cover why banks might not be your best option for 1031 exchanges. A 1031 exchange allows investors to reinvest the proceeds from the sale of an appreciated real estate asset into a like-kind property, deferring capital gains taxes. Under this provision, investors can exchange diverse types of business properties, with certain rules on value and debt replacement. However, during the exchange, they cannot access the sale proceeds, necessitating a qualified intermediary, or QI, to manage funds. Though the IRS doesn't specify explicit qualifications for a QI, it states who can't serve as one: the investor, family members, employers, employees, and agents. The term agent includes attorneys, accountants, real estate brokers, investment brokers, or bankers, and tax advisors. Many banks might offer 1031 exchange services, but having a pre-existing business relationship with a bank used for the 1031 exchange could lead the IRS to disallow the exchange, imposing unexpected capital gains taxes. The risk arises because banks with which you've conducted business may not qualify as QIs. To minimize risks, it's recommended to engage a bank for the 1031 exchange that you haven't done business with in the last 2 years, ensuring the IRS is less likely to reject your exchange. Contact one of our team members today or visit perchwealth.com for more information. This video presentation is not an offer to buy or a solicitation to sell a security. The video is a discussion pertaining to one or more investment strategies and/or asset classes, and is not a discussion of any specific offering, past or present, of securities. As a reminder, there is no guarantee that any investment or strategy will perform as targeted, and any investment involves the risk of the loss of some or all principal invested. This video contains statements intended for educational and hypothetical purposes only, and is not to be construed as a promise of performance. Information presented herein reflects the opinions of the speakers and is from sources believed to be reliable, but all information is subject to change. Not an offer to buy, nor a solicitation to sell securities. Information herein is provided for information purposes only and should not be relied upon to make an investment decision. All investing involves risk of loss of some or all principal invested. Past performance is not indicative of future results. Speak to your finance and/or tax professional prior to investing. Securities offered through Arcadius Capital, member FINRA SIPC. Advisory services offered through Arcadius Wealth, Perch Wealth, and Arcadius are not affiliated through any ownership. This material does not constitute an offer to sell, solicitation of an offer to buy, recommendation to buy, or representation as the suitability or appropriateness of any security, financial product, or instrument, unless explicitly stated as such. This information should not be construed as legal, regulatory, tax, personalized investment, or accounting advice. There is no guarantee that any strategy will be successful or achieve investment objectives. Potential for property loss. All real estate investments have the potential to lose value during the life of the investments. Change of tax status. The income stream and depreciation schedule for any investment property may affect the property owner's income bracket and/or tax status. An unfavorable tax ruling may cancel deferral of capital gains and result in immediate tax liabilities. Potential for foreclosure. All financed real estate investments have potential for foreclosure. Illiquidity. Because 1031 exchanges are commonly offered through private placement offerings and are illiquid securities, there is no secondary market for these investments. Reduction or elimination of monthly cash flow distributions. Like any investment in real estate, if a property unexpectedly loses tenants or sustains substantial damage, there is potential for suspension of cash flow distributions. Impact of fees and expenses. Costs associated with the transaction may impact investors' return and may outweigh the tax benefits.